All right, hello. This is gonna be a video over SMT and the dollar index and how you can use a dollar index with confluence with the indices and even forex. Today is July 4th. Happy July 4th, Independence Day, and let's get right into it. So starting off with SMT. You want to ask yourself, what is the definition of SMT, right? So SMT is the divergence between the assets that are correlated. So I don't trade forex, so I'm not too familiar with the forex side of the markets, but I do trade indices, and so when I mean the divergence between the assets that are correlated, NQ, ES, and YM, those three are in correlation with each other. So those three should be trading in sync. If markets aren't, manipulated, they should always be trading in sync. So when ES is going higher, NQ and YM should be going higher, and vice versa. If NQ is going higher, ES and YM should be going higher. SMT is ICT's concept. It stands for Smart Money Technique. It is a confluence to a trade setup. Not necessarily you shouldn't base your trade just because of SMT, but it is a confluence that can add, an extra it can give you more confidence and conviction in your trade if you can use that SMT with correlation to your trade as well. So if you want to view SMT as a crack in the algorithm. So like I said, if ES, NQ, and YM are all three going higher, right? If all three are going higher, there's no manipulation occurring. But if one of them were to make a lower low compared to the other, the other two. So what I mean by this is, I'll take this in an example. So follow my mouse here. So this low right here, notice how this low on ES is actually higher than the low here. So this is on ES, the one I'm marking out right here. Notice how this low on ES relative to the NQ, this low on ES is lower than the low than this low. But on NQ, we had this low, but this low here is not lower, so it's actually higher. And you can view this as SMT. This means that there's manipulation occurring, and that the algorithm is tipping its hand to you once again, that I'm sweeping these lows. Rather on NQ, we didn't sweep these lows, we actually stopped at a consequent encroachment of this 8-hour fair value gap. So like I said, you don't want to base your trade just because of you don't want to base your trade based off of SMT, but with confluence and narrative. So we had SMTs at this low, prices, this priced higher away from a key level, and this key level being the consequent encroachment of this 8-hour fair value gap. You want to add to your already pre-existing trade idea, that trade narrative that you just created for yourself. And you can use SMT as a strength indicator as well. This allows you to know which asset to trade in comparison to the others. So if you were just looking at the swing high, what occurred here, so notice how ES swept these lows. That means ES is relatively weaker compared to NQ, because NQ didn't take out those lows. So if you were to trade like a long position, you would want to base it off of NQs, because NQ is relatively stronger correct? We didn't sweep these lows. However, ES we did. This shows that there's strength in the Nasdaq and there's weakness in the ES. All right, and the second point, or the fourth point I do want to talk about, is a low or high that should not be revisited will most likely have SMT. A long-term top or bottom should always have SMT. So here we can establish this low right here as a strong low, or like a low that shouldn't be revisited as of right now, because our objective is to take out previous month's high and previous week's high, right? So this low right here should be respected, and it should also be respected because of the SMT here. That SMT just adds, like I said, more confluence to this low not being revisited. And like again, this is the one of the thing that you should take away here is that SMT should not be the sole reason to enter a trade, but it should be backed with other confluence as well. So like I said, based on this NQ trade, if you were to take this trade, you don't want to just base this trade off of because of SMT. You want to have an understanding why we had SMT there, and SMT usually occurs at key levels. In key levels, which I'm saying is key levels is like a fair value gap. It should occur at an important price. So like the important price here is that we're coming into a 8-hour fair value gap, a PD array, and we had SMTs there. There's two reasons right here that could be your narrative for a trade, and you want to go onto the lower time frames to find entry and find a target for you to take a piece of that pie. So here on this example that I'm showing you right here, ES is relatively stronger than NQ on this example. Notice where ES is compared to NQ. NQ took out the swing low, however, and ES did not, which means ES is stronger compared to NQ. Here on the 5-minute time frame, so I do want to state that SMT is fractal. You can find SMT on the lower time frames and on the higher time frames as well, but you have to understand that, like I said, you can't base your trade off of SMT. You can't base your trade off of every 1-minute SMT that you find, every 5-minute SMT that you find. You want to have it in confluence with another pre-existing narrative. Like, there should be a reason why prices has SMT there, and is it coming to a PD array, and such as that. So in this second example, just looking at this 5-minute chart right here, we can see how prices are very consolidative, not much displacement. And there's a video I speak about displacement, but there's not much fair value gaps here. Very consolidative, and seeing this SMT and seeing how we have this fair value gap here, and if you can spot the breaker pattern, that's good. But like I said, there's SMT here plus displacement. That's another displacement, or I'm sorry, not displacement, a narrative that you can have in mind here. And prices retracing into a breaker plus fair value gap plus SMT plus market structure shift. Then you can create a trade idea, a trade plan, and have an objective and take an entry based off of what you just came up with. So that is my SMT breakdown. I'll state it once again. SMT is a smart money technique. It is basically an indicator that compares the correlated assets that you are trading, and SMT is fractal. It can be used as a strength indicator. It can be used as a confluence to your trade, and It can also indicate when a market has topped or bottom if there is SMT between whatever correlated pair that you are trading. So the next thing that I do want to talk about, or the next topic that I do want to talk about, is the Dixie. So Dixie is basically the dollar. So remember how I said that there's correlations in markets? The dollar is inverse correlated to the indices. So if the indices are going higher as a trio, the dollar should be going lower, and vice versa. If the dollar is going higher, the indices should be going lower. So Dixie is the dollar index. Dixie on its own is useless to us day traders because we don't use it as a we don't trade the dollar. It's used as an indicator, and we can use it in confluence with the indices. Whenever we use the dollar in confluence with the indices, it can be a real game changer. It can limit the trades that you take, but those limited trades are more probable because you have the dollar in confluence with whatever trade setup that you're taking. So like I said before, Dixie and the three indices, NQES and YM, should be trading inversely, which means if Dixie goes up, the indices should be trading lower. You can also use Dixies on the forex pairs too. Like I said, I don't trade forex, so I'm not too sure how they correlate, but there is a correlation. I just don't know how they correlate. There is a correlation. You can check ICT's video; he talks about it. But yeah, so if you're trading conditions such as this, when Dixie is trading inversely to the indices, this would be considered a low resistance liquidity run. So your price targets will be hit faster. It's stronger moves, and it's just cleaner price action. The price moves in these conditions are faster in nature and not as lethargic. Lethargic as in very consolidation, but very back and forth. You apply the same technical analysis as you would on the indices to the dollar. The only difference is that you don't actually trade the Dixie, like I said before. It is treated like an extra indicator. Using the dollar in confluence with your trades will prevent any unnecessary losses and provide clearer narrative. I don't have any examples of the dollar with the compared to the indices, but here I will show you my dollar chart. So long term on the dollar as of right now, I do want to see higher prices and complete this market maker buy model almost. Just based on this daily time frame here, we have this original consolidation. We had a smart money reversal at a monthly fair value gap, and I do want to see this original consolidation buy side levels here to get taken. So, but as of right now, for short term trading, almost near the 4 hour and stuff, 4 hour charts, we're trading lower here. So we're trading lower on Wednesday, Tuesday. We traded higher on Monday. So on Tuesday and Wednesday, we're trading lower. And notice how we trade on the indices when the dollar is trading lower on Tuesday and Wednesday. So on the indices, on NQ, notice what we do here. So on Tuesday, we trade higher, right? And then this is the next day right here. So on Wednesday, we also trade higher. So like I said before, if the dollar is going lower, the moves going higher, whenever we would see higher prices on the indices, the moves are more or a lot faster. They're not lethargic. So like I said, there's an inverse correlation to these to this pair right here, the NQ and the dollar. And yeah, I think that's it for my SMT and dollar dollar video, and using the Dixie as an indicator almost. There's not much. I do have anything else to talk about, but yeah, I'll catch, and with that, I'll probably catch you guys on the next video. This is the SMT video for my YouTube channel, SMT and dollar video, and I'll catch you guys later in the next one. Peace out. Oh, bam.